Greetings, critical learners, and welcome to today's accounting lesson. My name is Mr. Simbi, and this lesson is brought to you by the Gauteng Department of Education in collaboration with Saibono Discovery Center. It is a Friday again, and at this time we always meet, and we are going to enjoy today's class. So I want you to do me a favor. Please ensure that you tell your friends that class has started. And today I'm going to do again a statement of financial position. But today's statement of financial position has a little bit of a twist because I'm going to start on something new that is called the calculation of correct net profit. So if you're wondering what is that, please tell your friends that class has started. We want to see you in class so that we can enjoy and understand the very interesting concepts that I'm going to teach you today. All right. So remember again, you need to have a worksheet. There's a worksheet that is going around. If you don't get that worksheet, please just speak to a teacher and they should give you a worksheet that we are going to use for today's class. So here are my objectives for today. I am going to do the calculation of correct net profit after tax calculation, all right? And then I am going to do some depreciation calculation, all right? So if you check in the previous, I think 2 or 3 classes, I have done several depreciation calculations. I have done a note number 3, I've done a disposal. So if you still need assistance on these things, please do visit last week's class or even the previous week. But very much more important is to follow what I'm going to do in today's class as I do some depreciation calculation. I'm going to do the retained income note. So this has been happening on average weekly, all right? And in note number 7, we're also doing an ordinary share capital note. In the worksheet that we are doing today, it was not demanded that we do this one, but we are just going to do it so that I can refreshen your memory of what the ordinary share capital is all about. And then we are going to do the statement of financial position. I know you love this one, so we're going to do it in today's class as well. All right, so let's begin with the calculation of correct net profit. Okay, but before we get into this, maybe we should talk a bit and get to understand, is it possible that mistakes can be done, errors can be done in the preparation of financial statements or in the calculation of correct net profit? Is it possible that mistakes can be done? Certainly, mistakes can be done in the calculation of our net profit. So there are mistakes whereby we record more or we record less. And there are areas where we omit the transaction completely. So I've spoken about 3 things. There is a mistake whereby we record more of an item, or we record less of an item, or we don't record the item completely. That is, we omit it. So these are 3 areas that you need to look at. So we're going to talk about this kind of errors as we are preparing to do the statement of financial position. So as we begin, we're going to start with the correct net profit calculation. And I'm going to explain a few errors and how these errors can then be corrected. If you're ready, let us begin. All right. Now, it is very important as you do your correct net profit calculation to know that if the expense was overstated, that simply means we recorded more of the expense, then the net profit must be increased. If you don't understand it for now, please just stay tuned. I'm going to explain further what I mean by this sentence. All right. The next one says, if the expense was understated, that means we recorded less of an expense. Therefore, the net profit must be reduced. Okay, please follow me. I'm going to expand more and I'm going to bring figures as we calculate in order for you to understand these statements. The third one then says, if the income was overstated, the net profit must be reduced. If the income was overstated, therefore the net profit will have to be reduced. If the income was understated, the net profit must be increased. All right, so this becomes number 4 statement, that if the income was understated and therefore the profit must be increased. All right, so we're going to begin with adjustment number 1. We want to see how these errors would have been made, and then how can we then correct some of these errors. To begin with, we have an adjustment, and in this case, it is income received in advance. You understand what is income received in advance? When we receive income for the next financial period, for example, if it's rent income, we're supposed to receive for 12 months, but then we receive for 13 months. The 1 month becomes income received in advance. So rent income, on our trial balance, we have 14,000, and we are told that the income received in advance is 4,000. You already know that when we prepare the statement of comprehensive income, what must we do when we have income received in advance? When you have income received in advance, in the statement of comprehensive income, you must take your 14,000, then subtract the income received in advance so that you remain with your 10,000 there. That is how it must be recorded. This is the correct way of recording it. However, our bookkeeper recorded it as 14,000. Instead of recording the 10,000, they just kept the 14,000 as it was. So it was recorded as this. So remember, this becomes wrong then. This becomes wrong because the 4,000 is income received in advance. All right. Now, what is the error that was committed here? More income was recorded. We were supposed to record income of 10,000. However, we recorded 14,000. That means more income was recorded in the statement of comprehensive income. If income is recorded more, what does it do? It overstates our profits. Therefore, our profits were overstated by 4,000. That is why now we end up with an incorrect net profit. Why? Because profit was overstated. We recorded more of income, hence our profit is also more. Our profit becomes more. How do we correct that then? The way we correct it is by subtracting that 4,000 from the incorrect net profit, because the 4,000 was supposed to be subtracted from the beginning, from the onset. However, it was not subtracted. Then our profit was overstated. In order to correct it, we come and then we subtract it from the incorrect net profit. This is error number 1. I think I have about 4 that I'm going to explain to you. So let's call this error number 1, and let's see if we can go to error number 2. Are you ready? Okay, let's go to error number 2 if you're ready. Error number 2. We have an adjustment as well, and this is accrued income now. Remember, we had income received in advance. This is accrued income. This is when we're supposed to receive income. However, we have not yet received that income. However, we have not yet received that income. So in the trial balance, we have 34,000, and the accrued income is 8,000. All right. How it is supposed to be recorded. This is the correct way in which we record accrued income. We have our amount in the trial balance, then we add the accrued income. We add it so that we end up with a 42,000. However, it was recorded as 34,000. You can see here, we've recorded less of income in this case. All right. So less of income was recorded in the statement of comprehensive income. So if we have less of income, how does it affect our profits? Our profits will be understated by that 8,000 because it was supposed to be recorded. Now it was not recorded. Therefore, our profits are understated. Once profits are understated, this is how we correct it. We go and we add the 8,000 to the incorrect net profit. We add the 8,000 to the incorrect net profit. Why? Because it was income that was not properly recorded. It was accrued income that we did not adjust for. Remember now, adjustment number 2. This is adjustment number 2. Can we go to number 3? Let's go to adjustment number 3. Adjustment number 3, it begins and it says, this is a prepaid expense. Remember, we dealt with 2 income. The first one was income received in advance. The second one was what? Yes, accrued income. So let's come to our expenses then. In our expenses, we have a prepaid expense. What is a prepaid expense? Already you can hear from the word prepaid. paid. In other words, we have paid an expense for a period in which we have not yet arrived. For example, we have paid insurance for the next financial period. That becomes a prepaid expense. And you understand that once you have a prepaid expense, all right, once you have a prepaid expense, all right, so here it must be a prepaid expense. So remember, it's a prepaid expense. So once you have your prepaid expense, how is it recorded? In the income statement, we should say our 13,000 minus the 2,000. We subtract that 2,000, that we end up with 11,000. That is how it must be recorded when it is a prepaid expense. How was it then recorded? It was recorded only as 13,000. This is incorrect, all right, because we have a prepaid expense. So recording the 13,000 is incorrect. Now, what did it lead to? It means more of an expense was recorded in the statement of comprehensive income. So if more of an expense is recorded, how does it affect profit? Therefore, profit was understated. Our profits were reduced in this case because we recorded more of the insurance expense. If profits were reduced, how do we correct it? Then we go and we add the 2,000 to the incorrect net profit. That is how we would correct this part. This becomes number 3. Okay, let's go now to the fourth one. In the fourth one, we have telephone, and now it's an accrued expense. All right, an accrued expense of telephone, 8,000. Accrued expense simply means it's an expense that we have not yet paid. All right, an expense that has been incurred but not yet catered for, not yet paid. All right, so if we have an accrued expense, you would know that in the statement of comprehensive income, we must add it. So we must take the amount from the trial balance and we add the accrued expense amount. Therefore, we end up with 9,200. That is how we do it when we prepare a normal statement of comprehensive income. However, this is how it was recorded. They only recorded 8,000. They only recorded 8,000. So if only 8,000 was recorded, what does that mean? It means we recorded less of an expense in the statement of comprehensive income. All right, so less of an expense was recorded. Now, if we record less of an expense, it will lead to our profits being overstated by 1.2. So if our profits were recorded more, overstated, how do we correct it? We subtract the 1.2 from the incorrect net profit. That is how we would then correct such an error. All right, now that I've given you the background, I will talk about transactions that are completely omitted. If it's completely omitted, I'll show you when we do it practically so. So let's begin with our activity. We are in the NSC November paper for the year 2019. You should have that worksheet. If you don't have it, please just ask your teacher. They should have that worksheet. Then you can work on that worksheet. Okay, let's see the information that came in this NSC November for the year 2019. All right, and then we have a question which is VC Limited. The financial year ended on 20th February 2019 required. Then we're going to calculate. So these amounts are related to our fixed assets. So we're going to do some fixed assets calculations. And then secondly, we're going to do the correct net profit after tax calculation. All right. And then we're going to indicate on that calculation either an increase or a decrease. And very interesting, we're going to do a retained income note. Then lastly, we'll do our statement of financial position. Okay, I'm excited about today's class because we're going to cover a lot of ground. We're going to do a lot of things. One thing that I want to encourage you, make sure you have your calculator, make sure you have a paper, make sure you have somewhere to write, because whatever I'm going to be telling you, you need to take these things down. Okay, I know most of you are preparing for your March control test, so I want to help you as we prepare for this test. How do we do some of these adjustments? I'm going to show you in today's class. And if you need more lessons on the statement of comprehensive income, please just search again on this very same account. You'll find accounting lessons that we've done from the previous lessons. I think in the previous 3 weeks or so, we were doing some interesting questions. We've done a number of statement of comprehensive income. So you can go back and watch these lessons, and they will assist you a lot in the preparation of your statement of comprehensive income. Okay, let's go on. In today's class, here is the information that relates to our fixed assets. All right, so we are told here that we have a delivery van that was sold for cash 195. Okay, let's go on. So this is the extract of information that was taken as of the 28th of February, the year 2019. But this is before taking the adjustments below into account. Let's see. These are some of the adjustments. So we're given the net profit before tax was calculated before correcting the following. All right. And then you see here's more information. And then this is all the information that relates to our question. And then let's now begin with some calculations. I know your calculator is ready and you want to do some calculations. So to begin with, it says, calculate amounts 1 and 2 in the fixed asset register. What is the fixed asset register? This is our fixed asset register. Okay, so this is where we record all information about a particular asset. So in this case, it is about our delivery vehicle, which is the X43, bought on the 1st of March 2016, and we're now disposing it on the 31st of October the year 2018. Very important to note, sold for cash 195,000. The rate of depreciation is 25% per annum on the diminishing balance method. So you need to know, once you're dealing with the diminishing balance method, you need to know your carrying value. Okay, so if you're ready, let us begin. We are calculating 1 and 2, and here is our answer book. So for me to get number 1, I am calculating depreciation for this year. All right, so first, let me see if I can just take the long way. If I take the long way, I need to get carrying value. And for you to get carrying value, you say cost minus accumulated depreciation gives you carrying value. My cost is 400,000, minus my accumulated depreciation, which is these two here. My accumulated depreciation is 175,000. Okay, that is going to give me my carrying value of 225,000. Okay, where do you see that 225? Over here. So now you understand how they got the 225. Do you see how they got the 225? They took the cost, which is your 400,000, and then they subtracted these two depreciation amounts. That is how they got the 225 here. Now that I have the 225, which is my carrying value, I can then come and say multiplied by the depreciation rate, which is 25%. 25 over 100. Then I say multiply this. I want to know for how many months did I have this asset in this year before we disposed it. You understand that the financial period begins on the 1st of March. All right, on the 1st of March, that is the year 2018, because it is ending on the 28th of February 2019. That is our financial period, 12 months. Now, this asset was disposed when? On the 31st of October. So you need to count from the 1st of March until the 31st of October. We need to see fingers at this point. All right, don't count silently. You might make a mistake. You can literally take out your fingers in the exam, and then you begin and say March, April, May, June, July, August, September, October, 31st of October. How many months do we see there? So we have 8 months. Then I say multiply by 8 over 12. Let's have our calculators close. How much do you get there, guys? Thank you. I hear someone say I got 37,500. 37.5. Do you also get 37.5? Yes, I'm getting the same here as well, 37.5. So that becomes the answer to number 1, 37,500. Okay, so I wanted to show you the entire process, how we get to the 225 and then how we then get the 37,500. So it means in the year that we're disposing this asset is losing value and it's losing 37,500, 37.5. That is its depreciation. Okay, can I go on to number 2? Thank you. Number 2. Number 2, we are calculating the carrying value here then. The carrying value. Okay, there is several ways again in which we could have done this. Okay, so first, I'm going to show you the long way, how to get that carrying value. I will say my cost minus accumulated depreciation is equal to carrying value. Okay, so this is the first method that I'm going to show you. I'll take my cost, which is 400,000. All right. Then I say minus my accumulated depreciation. Remember, I had 175 here. So I'll say 175 plus the accumulated depreciation for this year, which is your 37,500. And if I close my bracket, someone tell me, how much do I get here? Say it again. 187,500. That is very correct. Okay, I see most of you are getting 187.5. This was one way of getting it. The other way is going to be the quicker way now. The quicker way was to take your 225 here. Okay, that's the second way. The quicker way now is to take your 225 here, 225,000. Then you simply say minus the depreciation for this year, 37.5. How much do you get? You still get your 187,500. Okay, so I showed you how many ways? 2 ways. I showed you the longer way where everything comes from the cost minus accumulated depreciation to get your carrying value. The quicker way is to take last year's carrying value, which is your 225. Then you simply subtract the depreciation. Then you get the new carrying value, which is 187,500. Are we good? Okay, thank you. So once we are done with that, I'm going to move on now to my second calculation. Let's go to the second calculation. Here is the second calculation. Okay, so remember we've just calculated these two amounts, okay? Remember. All right, so my second calculation, what am I calculating now? Calculate the profit or loss on sale of an asset. Oh, I like this one because I've seen it come several times. I think in the previous week we did a calculation like this. If you check in what we did last week, we had one almost similar to this, where you must calculate either a profit or a loss when an asset has been sold. Okay, let's see if we have an answer book. All right, do we have an answer book here? I want to see if we have an answer book for this one. All right, yes. Okay, so we're just going to write it down here. We'll now say that this asset that we have disposed, we now know that it was sold for, we're told here, it was sold for 195. So it was sold for 195,000. Now that it was sold for 195,000, we want to know how much was its carrying value. In other words, how much was it worth when we sold it? Its carrying value is 187.5. 187.5. Okay, so we sold it for 195, yet its carrying value was 187,500. So we want to know, did we make a profit or a loss? So we sold it for 195. We got 195,000 when selling this asset. Yet its value was not 195. It was 187. Are you following? So I'm going to say it again in a different way. We have an asset now which is a value of 187,500. That is how much it's worth. But we are now selling it for 195. That means we're selling it for a higher price than what it is worth. It's worth 187.5, but we're selling it for 195. Are we getting a profit or a loss? Definitely, we are getting a profit because we have sold it for a higher price than its carrying value. How much is that profit? So you're getting the difference between your 195 and your 187.5. All right, guys, I want to see those calculators. Let me see those calculators. All right, you get 7,500. Thank you. 7.5 becomes your profit on sale of an asset. You will see later, because we're going to do the correct net profit calculation, you will see later that I'm going to take the depreciation that I calculated and the 7.5 as well, which is the profit, and I'm going to record it. So just keep in mind these amounts because later you're going to see them again. All right, now that we have our profit, let's see what is the next question that comes. The next question that comes now says, we are to complete, all right, the statement of financial position. We need to calculate the carrying value, Okay, so what we know is we have fixed assets here and they have a carrying value of 10,190,000. So I'll come here and I'll say my fixed assets are 10,190,000. So I'm coming here. Here's my 10,190,000. Then from these assets, we know that we have calculated depreciation, and that depreciation is how much? 37.5. So I'll come, then I'll say minus the depreciation of 37,500. Minus that depreciation of 37,500. Then I'll also come and say this asset has also been disposed. So we don't have that asset anymore in our business books. So I'll come and say minus 187,500. Once an asset is disposed, we take it out from our business books. So hence you see here, I'm saying minus 187,500. Then I'm going to close this bracket. Remember, we are going to prepare the statement of financial position. So I'm going to come here now. I need to see calculators. Let's punch in 10,190,000 minus 37,500 minus 187,500. How much do we get? We end up with 9,965,000. 9,965,000. Thank you so much. Thank you so much. I really appreciate those that are punching in the figures. We end up with 9,965,000. Okay, can I move on? Okay, let's go on. Let's go on to the next one. So now we are going in fully with the calculation of correct net profit after tax. Okay, what were we given? We were given adjustments. Then we're given the net profit before tax. Very key. Net profit before tax. And it is 822,700. Okay, this is calculated before correcting the following. Number one, provision for bad debts must be increased by 65,000. All right, so let's see if we have somewhere to write. I understand very well that when I have my provision for bad debts, there is a simpler way to understand whether I have income or an expense. All right, when provision for bad debts increases, an increase will be treated as an expense. Yet a decrease in provision will be treated as income. So I have two things here. I have an increase, which is an expense, but I also have a decrease, which is considered income. Here we are told provision for bad debts must be increased. So already I know that I have what? I have an expense that I must record, and it is 65,000. So once I have an expense that has not been recorded, that means I have an expense that was not taken into account when we calculated the correct net profit. That means my expenses were less because I have an expense that was not recorded. So my expenses are less. Once my expenses are less, my profit is more. So in order for me to correct that, I am going to go and reduce my profit. So I'm going to come here and say provision for bad debts adjustment. Okay, all right, adjustment. How much is it? 65,000. So when I come here, remember my incorrect net profit was overstated. And in order to correct it, I'm going to come and say minus 65,000. Minus 65,000. Can I go on? I understand that in this very same question, I'm going to prepare the statement of financial position. And when I have provision for bad debts, does it affect the statement of financial position? Certainly it does. All right. So let's see where we're going to record it under our current assets. So what am I going to take first? I'm going to take my net trade debtors. So let me just come here and say trade and other receivables. Trade and other receivables. Okay. And then I'm going to open my bracket. Do you see that? Opening brackets is very important. Opening brackets. Then I take my 1,090,000. So I'm coming here to say 1,090,000. What is my next step? To come and subtract, because this is a provision for bad debts amount that is increased. That simply means my debtors control amount is going to decrease. I subtract that 65,000. Are we together? Okay, so I've adjusted it in the correct net profit calculation as well as in the statement of financial position. Two places I have adjusted that 65,000. Can I go on? Okay, all right. Let's go on to the next aspect. The next one says here, 9,800 of an advertising contract applies to the next financial year. All right. I think we did do something like this, whereby we have an expense that has been paid in advance. Exactly. So this is a prepaid expense. What did we say about the prepaid expense? We said our prepaid expense is going to increase our expenses. Once our expenses increase, our profits will decrease. You remember that one? So we want to see now, how do we correct that one? All right, let's see. Do I have an answer book? Yes, I have it. So when I come here, what am I going to say? I'm going to say advertising. I'm coming here to say advertising. And my amount is 9,800. So what I am sitting with is expenses that were recorded more. If expenses were recorded more, my profit becomes less. So I'm sitting with profit that is less because we recorded an expense for the next financial year in this year. Was it supposed to be in this year? No, it's for the next financial year, which led to expenses being more, profits being less. How do I correct that? I come and I add back this 9,800. So come here, then I'll say plus 9,800 plus 9,800. That is how I would correct that one. All right. Now, the next question is, if we have a prepaid expense, does it affect the statement of financial position? Certainly it will. So let's see if we can record this in our statement of financial position. Okay. So this is an expense, 9,800, which is an expense that relates to the next financial period. Okay, so this should affect, so remember, this is trade and other receivables. Okay, so here I should come to my current assets here. I should come to my current assets. This is trade and other receivables. So I'm coming to my current assets. And remember, we have already recorded some particular amounts already. So I'm going to come to those amounts. Remember, we had recorded under our trade and other receivables and our trade other receivables, we recorded some particular amounts. So we're going to come now and we're going to say plus how much? Plus the 9,800. So I'll come here, then I'll say plus the 9,800 under our current assets. Can I move on to the next one? Let's go on to the very next one. All right, it says a tenant paid rent 334,000 for the period 1 March 2018 to 31 March. Okay, so we see here there's 31 March and there's 1 March. We know that our financial period should start from 1 March 2018 until 28 February 2019. That is the 12 months. But we're told it is gone up to March again. That means we have 1 extra month. So our tenant has paid rent in advance. So we have income received in advance. Let's see how much that is. We're then told rent was increased by 3,000 from the 1st of January. That means we have how many months that we have received the increase? It is January, it is February. Then the year was supposed to end. But remember, this tenant paid until March. So we have 3 months that we have received rent with an increase. And that increase is 3,000. That means the total increase is how much? 9,000. That is the total increase. So I'll then come and I will now say my 334,000 minus 9,000 minus 9,000. 334,000 minus 9,000. Okay, I need calculators. How much do I get? 334 minus 9,000. I get 325,000. 325. Now, this is now rent for 13 months without any increase. So I can divide this then by 13. Okay, how much do I get after I divide this by 13? Okay, I get 25,000. Thank you. Get 25,000. So here it becomes 25,000. This becomes your rent before the increase. But the month of March is after increase because it increased on the 1st of January. So I'll now say that 25,000 plus the 3,000 of increase, that will give you 28,000. 28,000. The 28,000 is what becomes the rent income received in advance. All right, so let's come here now. So once income is received in advance, what happens? If income received in advance, that means our income was overstated. Once income is overstated, our profits are also overstated. So we need to come here and then we now need to say on that rent income, we have overstated income here. How do we correct it? We come then we say minus how much? Minus my 28,000. Minus my 28,000. That is how we are supposed to do it. All right. So if I have my income received in advance, you understand that this is a liability because we have received income in advance. That is a liability. So I'm coming in now under my current liabilities. Remember, this is my creditors control. And remember this 9.8, all right? That amount that we just dealt with earlier on, I think that was our advertising amount, okay? All right, so that amount there was supposed to go to trade and other receivables, all right? So we're gonna come, then let's ignore this one. Then we're gonna come, then we're gonna say plus how much? Plus my 28,000. Plus my 28,000. So I bring my 28,000 over here. I bring my 28,000 over here. So I have my trade and other payables, which is the 1,906,800 plus my 28,000. Okay, let's come on to the next adjustment. Depreciation. and profit and loss on the vehicle must be recorded. All right, so we have already calculated depreciation. Remember, we've already calculated depreciation. So what we're going to come and do is to record that depreciation. So we have an expense for depreciation which was not recorded. And my depreciation, I'm going to bring it in brackets now. My depreciation, remember, it's an expense that was not yet recorded. That's my 37,500, an expense that was not yet recorded. And remember, we calculated profit, and we had profit on sale of asset. Profit on sale of asset. Profit on sale of asset. And the profit on the sale of asset was 7,500. So I'll bring my 7.5 here. That will increase my profit because I have profit on sale of asset. Okay, so I'm going to move on to the next one. And the next one will now say a further 43,000 is owed for income tax. 43,000 is owed for income tax. So what I have is the list of totals. I have my provisional payments. Remember, there is my 155,000, my provisional payments. Now, when I am preparing the correct net profit calculation after tax, that means I must come here and record my income tax. So come here, then I'll say income tax. How much were my provisional payments? My provisional payments were 155,000. Then I'm told we still owe a further 43,000. That simply means the income tax amount for the year is the provisional tax payments plus a further 43,000. So I'm going to come here and say plus 43,000. 155 plus 43,000. All right. So I'm going to end up now with 198,000. 198,000. All right. We all know that once you are told that income tax is owing, a further 43 is owed for income tax. That means we are now dealing with a liability. So I'm going to come here and we're going to record now our SARS income tax under our current liabilities. Here is our SARS income tax, and that is going to give you 43,000. That goes under our current liabilities. Okay, so we have now concluded this question, and at the end you end up now with your correct net profit after tax, which is 511,500. 511,500. We're going to take a quick 5-minute break, and after the break we're going to continue with our statement of financial position. See you after 5 minutes.
Excellence. Excellence is a habit. Excellence is a quality you have, a quality I have. It's a quality we have when we honor what is true to us. Yes, we are gifted differently. uNkulunkulu akasinganga ngokufana. Excellence is striving for your best. Whenever you have a particular project, test, homework, uzibuze, ask yourself, is this my best? Can I put in more effort? Excellence is striving to be in the top 1% of the area in which you are gifted. And so I challenge you, in every single thing that you do, in every single area that you're gifted in, whether it's sports, it's academic, ucula, whatever that gift is, strive for excellence.
Welcome back, dear learners. Before the ad break, we started with the correct net profit calculation. I think most of you enjoyed it because we had expenses that were not recorded. We had expenses that were recorded more. We had income that was not recorded. And we had income that was either recorded more or less. And I showed you how we go about that. But very important that whenever you do these adjustments, remember that some of these adjustments also affect our statement of financial position. So in that case, you must be able to record in the statement of financial position. That is what we have been doing. So now we're going to go further into the statement of financial position. All right. So what we are given here has to relate to our retained income. So here's our retained income. What we were calculating is the correct net profit after tax. There is the correct net profit after tax. And we know that when we are preparing note 8, which is your retained income, you must bring the net profit after tax. So that is 511,500. So I'm going to take that figure and I'm going to bring it here. So I'm going to bring my 511,500. All right. So I calculated it here and now I'm simply taking it to my note number 8. That is the retained income note. All right. So after I've done that, let's quickly now go on to more calculations. I just wanted to show you that when you do the correct net profit calculation, that amount that you get there will also be put in the retained income note, especially if the examiner demands that you do the retained income. As in this particular worksheet from the NSC November 2019, they required that the amount after the correct net profit calculation be taken to our retained income, and we've done exactly that. Okay, so let's go on and see further calculations. Now, this information relates to our shares, the issue of shares. Remember, we are doing the retained income. Okay, there is our retained income note, but I thought, you know what? Let's also open an ordinary share capital note just in case you missed last week's class or the previous one. If not the previous one again, you will still get to understand how to record certain amounts in our note number 7. So let's begin so that you can understand the relationship between note 7 and note 8. So to begin with, we are told 2 million shares are in issue and their book value is 7.6 million. All right. But one interesting and very important thing is to consider the amounts that are given in the list of balances here. As you can see, you have ordinary share capital here, which is 8,152,000. So I'll take that amount, which is my balance at the end. So I'm just going to bring it here at the bottom. That is my 8,152,000. Okay, so I bring it right here at the bottom. And then I am now told that there is 2 million shares in issue. So I'll come here, I'll have my 2 million. There is my 2 million. And then I'm going to say shares in issue. So this is 2 million shares in issue. And for those 2 million shares, did I have the value? Was I given their value? Yes, 7.6 million. 7.6 million. That is 7,600,000. Okay. Then, immediately after that, we are told the next thing that happens is a repurchase of shares. All right. So once I hear the word repurchase, brackets, no compromise. All right. So 360,000 shares we repurchase. So I'll come here and I'm going to have my 360,000 shares here. So these are shares repurchased. We know that once shares are repurchased, we must record the average price in our note number 7. All right, we must record the average price, but we don't have the average price here. Can we calculate it? Certainly we can. How do we do that? We say 7.6 million, then we divide it by 2 million, divided by 2 million. 7.6 divided by 2 million. How much is the average price? I need calculators, please. 7.6 divided by 2 million. How much will you get? You get 3 Rand 80. Thank you. You get 3 Rand 80. That means I come here now to my triangle, I am told that these shares are repurchased at 4.10 each. I know that my 4.10 comes to the top. 4.10. This goes to your cash flow statement. If you check in the previous lessons, I've not been saying cash flow, but now we are getting closer to the cash flow. So I have to begin to talk about the cash flow. So the 4.10 goes to the cash flow. And then the average price was how much? 3.80. That is what goes to the ordinary share capital note. But if we say 4.10 minus 3.80, how much is that difference? You get your 30 cents. That is what goes to your retained income. That is what goes to the retained income. But let's do it now. So we're going to come here and I'm going to say 360,000 shares repurchased at 3.80. How much is that going to give us? That will give us, I need calculators. You're saying 360,000 multiplied by 3.80. How much you get? 1 million, say it again, 1,368,000. 1,368,000. Okay, so we got that one. Immediately, once I've recorded in my note 7, I must now go to my note 8. All right, my note 8. And I'm going to now come in and say repurchase of shares. Repurchase of shares. And I know that the shares that I have repurchased are 360,000. And the amount that I've paid above the average price, the amount that I've paid more than the average price is how much? 30 cents. There it is. So I'm going to come in and say multiply it by my 30 cents. I need calculators. Once I see repurchase brackets all the way, please tell me how much do you get? If I say 360,000 multiplied by 30 cents, thank you. You get 108,000. Okay, 108,000. Let's continue now. We're told that 800,000 new shares were issued. So I'll come here and I'll say 800,000 shares issued. Do I know the price? I don't know. Do I have to worry? Certainly not. Then I'll get my number of shares here at the bottom, which you were given, which is 2,440,000. Okay, so here we're going to get our 2,440,000. Okay, I am not able to write on that part 2,440,000. That is what we would send right at the bottom there. I'm not able to write on that part at the moment, so that becomes our shares at the end. Now we want to get that amount there. We want to get that amount there. How do we get that amount? Very simple. We do the bottom up approach. Let's see if we can do it together to get that amount. We will now say the amount at the bottom, which is your 8,152,000. 8,152,000. Then what else do you say? Then you say that amount. Then we add, then we say plus the 1,368,000 plus 1,368,000. 1,368,000. And then what is next? Then you say minus 7.6 million. 7,600,000. All right. Now, how much will that become? That will become your 1,920,000. 1,920,000. So I'm going to come here and I say my answer here is 1,920,000. You're wondering, Mr. Simbi, I don't see the answer book for this question. There is no answer book for it. We decided, why not do it? Because there was sufficient information for us to do note number 7. So we're just doing it. But our main demand in this question was the note 8. Okay, so let's go and complete our note 8. Let's go and complete our note 8. We were then told that interim dividends were paid in September, 295,200. So that is not even a problem. So I'm just going to come here. It's 295,200. What were these? Interim dividends were paid. Final dividends of 20 cents per share were declared. So final dividend of 20 cents per share were declared. So I'm going to come here and I'm going to now say open bracket, and then I will now say my number of shares at the end, which is 2,440,000. Then I multiply that by my 20 cents. How much is that going to give us? We're going to get 488,000. 488,000. Then we're going to add these two figures. We're going to add these two figures, and then we'll end up now with how much? 783,000. 783,000. Once I have my 783,000, I can now get my balance at the end. Okay, someone is saying, Mr. Simbi, let's check that figure again. Is it 783,000? It has to be 783,200. 783,200. Okay, 783,200. And then the balance at the end therefore becomes 485,600. 485,600. Okay, now I hope you've understood what we did here. All right, we've opened note 7. We've also opened note number 8. All right, we're going to take only 1 minute break, exactly 1 minute break, and then we're going to continue. So don't go anywhere. I will be back in exactly 1 minute. Welcome back, guys. Before the break, you remember what we did? Note number 7, note number 8. And remember what I said? Note number 7 was not demanded in this question. It's us who decided, you know what? Why don't we just do it? And then we did it. Did it come right? I'm happy if you are happy. All right. But in these calculations, you will see that there are certain figures that we can take to the statement of financial position. So let's see. All right, so from what we have here, we can be able to calculate our statement of, to record some information rather for the statement of financial position. So we are going to take this amount there, that's your 485,000. I'll bring it here to my retained income. So I'm going to come and say 485,600. All right, I need calculators close. I need calculators close. And then if I add these two amounts, they will then give me my shareholders' equity here at the top. So I'm going to say 8,152,000 plus the 485,600. That will give me 8,637,600. Okay, so that is what I then get after I've added this. When you are here, which financial indicator comes to your mind? Which financial indicator comes to your mind? Net asset value per share. The net asset value per share. The net asset value per share. What is the formula? It is my shareholders' equity. So I'm going to take my shareholders' equity, which is my 8,637,600. What do I do with it? I divide it by the number of shares in issue, which is my 2,440,000. Then I multiply by 100. Okay, calculators, guys, calculators. How much you get? 300. You say 300 what? 354. Is it percentages? Is it rands? Is it mice or donkeys? Cents. Thank you. 354 cents. So your answer has to be in cents. Your answer must be in cents. So once you get here, you have to ask yourself, am I able to calculate a financial indicator? Yes, you are able to calculate NAV, net asset value per share, shareholders' equity over the number of shares in issue. And your answer must be in cents. So once we are done there, I'm going to move on. Remember, we have done the retained income. We have taken the first amount here. Is there another amount that we can take from our retained income note to the statement of financial position? Is there any other amount? Yes, there is another amount. Which one is it? Okay, someone is saying the final dividends, Mr. Simbi. You're very correct. We come and take this one. That becomes number 2. Okay, so let's come here. All right, so where am I going to take it? Under my current liabilities. What do I say now? Shareholders for dividends. Shareholders for dividends. How much is the shareholders for dividends? That is your amount there. So you're going to get your 488,000. 488,000. That is your shareholders for dividends. Okay, can I go on? Okay, all right, let's move on then. Let's move on. Okay, so my next one is a creditor with a debit balance of 7,600 must be transferred to the debtor's ledger. Okay, so we have a creditor with a debit balance. Okay, so I know I'm going to record this in my statement of financial position. Okay, let's do this practically together. A creditor. That means I'm going to open first my creditors ledger. Creditors ledger. This is a liability. So it means on the credit side, it's going to be a plus here. On the debit side, it's going to be a minus. You're correct. Then my other one is going to be my debtors ledger, which is an asset. An asset on the debit side, I'm going to say plus. And then on the credit side, I'm going to say minus. Okay. Now, let's follow what we are being told here. A creditor with a debit balance. That means I come to my creditors ledger. I have a balance here, a debit balance of 7,600. Must be transferred to the debtors ledger. If I'm going to transfer that amount, I will bring it to the credit side because it's on the debit side. So if I'm going to transfer it, I transfer it by bringing it here, 7.6. All right, so I'm transferring it now. And then to complete double entry, I have credited the creditors ledger. Then I'm going to come and debit now the debtors ledger with how much? 7,600. So when I am transferring this amount, I am bringing it from here to this side. Okay, what does that mean? It means I have credited my creditors ledger, which is a plus. So I'm going to come to my trade and other payables, and I'm going to say plus 7,600. And then I'm going to come to my debtors ledger. I'm going to say plus under my trade and other receivables, 7,600. That is how I transfer an amount from the debit side of the creditors to the debtors ledger. That is how I would do it. Key are the signs. The signs are very important. It's a plus 7.6 and here it's a plus 7.6. If you want to understand it easy, quickly do these tiny little ledger accounts and then that will make it easy for you. Okay, let's quickly move on to the next one then. My next one then is saying, after processing all adjustments, the current ratio is 0.8:1. Okay, so here I am being given the current ratio. All right, but let's see if we are able to understand what is the current ratio. The current ratio is a financial indicator, and this financial indicator has a formula, which is current assets as to current liabilities. This is your current ratio then. This is your current ratio. But we are told that your current liabilities will total to 2.9 million. The current liabilities will total to 2.9 million. Let's see if we can get that information. So that simply means my 2.9 is there, current liabilities. We have our trade and other payables. You remember, we have recorded these amounts. And we are over there. Remember, sales income tax, we dealt with it. Shareholders for dividends. These things you all remember. That means if I add these three, they won't give me 2.9 million. There is an amount that is missing then. That is an amount for the current portion of loan. Hence, we are told here now, the current portion of the loan is the balancing figure. That means if I want to get the current portion of loan, I have to consider that if I add everything, it gives me 2.9 million. All right, let's quickly see if we can get the current portion of the loan. Okay, for me to get the current portion of loan, I will now come and say, my 2.9 million, you see, that is the top part, the 2.9 million. Then I will now say minus my 1,942,400, 1,942,400. Then I say minus again, minus 43,000, and then minus again 488,000. Okay, how much would that give me? That would then give me 426,600. So that is my current portion of loan. Let's bring it here now. So I'm going to get 426,600. 426,600. That becomes my current portion of loan. 426,600. Now, once I have that, what is the current portion of loan? The current portion of loan is that portion of the loan which is a non-current liability, which is going to be paid within the next 12 months. Remember, your non-current liabilities are liabilities that will be paid for a longer period, that is 12 months and more. And any portion of that non-current liability which will be paid within the short term becomes the short-term loan, current portion of loan. So we now know that of the entire loan amount, a part of it is going to be paid within the next 12 months, and that part is 426,600. Now, let's see if we're able to record this in the face of our statement of financial position. All right, so we can come here and we can now say, from the list of balances we're given the loan, which was 1,758,000, there it is. We now know that a part of it will be paid within the next 12 months, and that part is 426,600. So I'll come here, then I'll say minus 426,600. I close the bracket. And then, how much is that going to give me? 1 million, say it again, 1,332,000. 1,332,000. All right, so because it's 426,600, then it's going to give, let's put it on the calculator. If we are going to get that figure there, we are going to say our 1,758,000. It's our 1,758,000. So it's 1,758,000. 1,758,000. Then we say minus the 426,600. 426,600. Okay, so that is going to give us an amount that is 331. Thank you. 1,331,000. Let's bring it back. There it is. 1,331,400. 1,331,400. 1,331,400. 1,331,400. Okay, so that becomes your loan eventually at the end. 1,331,400. Okay. Once we have that part sorted, then we can now quickly move on to the next aspect. All right. So we now have our part of the loan, and we are now going to complete the other parts that we need. All right. So in order for us to do that, let's quickly come and we're going to add up all our figures. We're going to add up all our figures. So that is the first part that we have just done. So we're going to come here and we are now going to add everything. So we're now going to say, so remember here, we are going to get our 1,300,000. Let's get our calculator. That is our 1,331,000. 1,331,400. That is our 1,331,400. Okay, 1,331,400. So we're going to get our total equity and liabilities at the end. And in order for us to get our total equity and liabilities at the end, say 1,331,400. Then we're going to say plus the current liabilities, which is your 2.9 million, plus your 2.9 million. And then we're going to say again plus your 8,637,000, your 8,637,600. All right, so that's going to give us now the closing balance of 12,600, 12,869, 12,869,000, 12,869,000, 12,869,000. That is how it ends. 12,869,000. All right. So once we get that, that is our 12,869,000. We're now going to go on to the next part, which is our assets part. So we now know that we're given the current ratio of 0.8:1, and then we're given current liabilities over there. All right. And then what we want to get is our current assets. But we know that the current ratio is 0.8:1. But the current ratio, what is its formula? It is current assets as to current liabilities. And our current assets, so we're going to say our current assets as to, we are given current liabilities, which is 2.9 million, is equal to 0.8:1. Okay, so our current assets as to current liabilities, it is 0.8:1. So I'm going to cross multiply there. I'll cross multiply. Therefore, I would then say my current assets is then equal to your 2.9 million multiplied by 0.8. Your 2.9 million multiplied by 0.8. Please, can we punch that in the calculator? How much do we get? You get your 2,320,000. 2,320,000. All right. So I'll come here now on my current assets. I need to show that this is how I got my current assets. I'll now say your 2.9 million on the current assets. Then I'll say multiplied by 0.8, and it will give me 2,320,000. 2,320,000. Now, I should be able to get my cash and cash equivalents. How do I get that? I'll say 2,320,000 minus 1,102,000 minus 1,042,400, and that will give me 175,600. 175,600. Okay, so now we have our current assets at this point. We have our current assets. Now, let's go and complete our current assets. Let's go and complete our current assets. In completing our current assets, we are now coming here. Remember, here it has to be 12,869,000 here. All right, let me show you how we're going to close this. We have this one already, which is our 2,320,000, and then the fixed deposit was the balancing figure here. All right, so you are now going to get a fixed deposit which is 584,000. All right, so this will become 10,549,000, and the fixed deposit becomes 584,000, like that. Okay, so we can then come to the very last slide, which is this one. Remember, it has to be 12,869,000, 12,869,000 over there. All right, and this one is 584,000, and that becomes 10,549,000. This is how you'd complete this statement of financial position. All right, ladies and gentlemen, we've come to the end of today's class, and I want to thank you for joining this class today. In next week's class, we're going to continue again with the financial statements. It is very important that you continue working on these financial statements: your statement of comprehensive income, your statement of financial position, as well as the calculation of correct net profit. We have not yet started with the cash flow statement. So up to see you next week, same time, same place, calculators ready and pencils sharp. Until next time, goodbye.